All right, well, the What Do We Do podcast, episode 22, and I don't know if you guys can tell, I'm not Kyle Bogey in terms of my voice right now, but Dewey, what's up, man?
Hey,
Mike Sullivan, Dewey Stefan, how
Mike
are you?
Sullivan, it's good to see you and hear your voice. I know it's Halloween week here at Great Lakes
It
Wealth,
is.
so I thought maybe Kyle Bogey dressed up in a Mike Sullivan costume.
I don't know if he could look that good.
I
right?
mean, voice and all. Like, no way. This might be Kyle Bogey. I don't know. But anyway, Mike, we're glad to have you here.
Well, I figured, Dewey, I would step out of the control room to actually join you on an episode for once,
I do know because today's episode is on your favorite topic.
Yeah.
Except for golf. I mean, investment related. This is your favorite topic, right? So we're excited to talk about options today.
Yes.
And so I'm glad that you were able to push Bogey out of his chair.
I had to kick him out.
Yeah, and it's going to be me and you and a special guest today here in a few minutes. So let's get it going.
Looking forward to that, Dewey, absolutely. And I think that, as you said, as someone who's 27, I've gotten into options recently. I'm not going to be anywhere near as an expert as the guest we're about to have on, but I certainly enjoy it. And I thought that, I appreciate you having me on for this episode, be able to join the What Do We Do podcast to talk about this. I do think that, real quick before we get to our guest, I do think that this is a topic that is really informative for a lot of people to hear and listen to because, I'll speak for myself and you can answer this as well, but I do think a lot of people, in terms of just the average American, average investor out there, don't really know a ton about options trading.
No, it's a complicated subject. Our guest today will be able to, take the complicated and turn it simple, I think, by and large, during this podcast. But also, again, it's Halloween week, and so options many think are scary. Right? And so we did this on purpose because options can be scary for sure if you don't know what you're doing or why you're doing what you're doing, right? But options can also be extremely safe and let you sleep at night, right? So it really depends on what you're doing. So yes.
Are options a trick or a treat? Dewey, before we get to our guest here, speaking of treats, any other treats or nuggets you had to go over in terms of information, or are you good to really dive in here?
I think we're going to start by just figuring where Halloween came from to start. Okay,
Great.
So Halloween is believed to be a word originated in Scotland in the early 1700s. Halloween is supposedly derived from the term Holly Eve, or actually derived from the term Holy Eve, okay? The name of the day before the November 1st Celtic New Year. Little history for you here at Great Lakes Wealth. What do we do, okay?
Love it.
All right, so Wall Street also has its own share of scary words. Trick or treat, for sure. Options doesn't sound very scary. They certainly might be. But have you heard of anything called a graveyard market? Have you heard
I would
of it?
assume that means a market that's dead, that's flat.
It refers to
Not
bear
full of
markets.
life.
Well, sort of. So it refers to bear
Sure,
markets
bear market.
in which investors can't sell their holdings without suffering large losses, while other investors, wary of the bear market, decide not to invest at all.
Mm-hmm.
Right? Graveyard market keeps you away if you're not in, and if you're in, you're not going to do anything.
Will you be dressing as a skeleton for Halloween this
I'm going to
year,
dress up as a big orange pumpkin. I started today with an orange shirt that says Great Lakes Wealth, but I'm going to be the great pumpkin Charlie Brown.
What was your favorite costume as a kid? Any stick out that you dressed up as, or what?
Well, it was actually as an adult. Bogey, are you sure you're not Bogey dressed in costume?
No, but I don't think Bogey can look quite as good as I am.
Kyle
right?
asked me this a few weeks ago, right? And I told him that I normally don't dress up and do these things, but I actually have two when I thought about it. One was when I was about his age, when he was saying he went dressed up as a 50s character, and then he said he went and he also made his own costume of, I think it was Pluto? Goofy. He started his own costume made up as Goofy. Well, I had this grandiose idea in my early 20s to dress up as a hula dancer. Do you believe I'm saying this on the airwaves
Where's
right
a
now?
photo of that?
Do you know what I mean?
Can we post that on the Great
listen,
Lakes Wealth social
I'm
media
telling you,
pages?
I had a grass skirt. I had these coconuts, if you will. And I don't think there's a photo, and I sure hope not. But that was a costume that I certainly will never forget, nor will my my friends of those times.
If that photo surfaces, you better believe that it'll be posted on the Great Lakes Wealth and What Do We Do social media channels. So make sure you're following
again,
that.
if you can't have a little fun on Halloween, I mean, what the heck's the point, right?
But Dewey, to kind of wrap up this discussion before we of course get into the options, we talked about a graveyard market. We talked about some fun with Halloween. I do have one comment too, real quick, from a investment in the stock market standpoint. I've always kind of viewed, we talked in prior episodes, as how some investing and how some consumer behaviors can change going into the holidays, going into Thanksgiving and Christmas time and Q4, of course. Mm-hmm. That kind of is a signal as well right now. We're entering November. We're entering that holiday time after Halloween, and I think that's based on prior episodes as well, just fascinating to talk about from a planning standpoint and a wrapping up the year type thing too.
Absolutely. This year's been a little different, too, because it might be back-end loaded because of all the disconnect with COVID-19. Even just a week ago or 2 weeks ago, actually, was the Amazon Prime Day.
Right.
They had to do 2 days, and they did it much later than they normally would, right? So whether the buying season this year is going to be all online versus going to the malls, or what percentage is now, shipped versus people shopping, it's going to have, interesting data points, and it's going to be very interesting to see, what happens at the end of the year through the holiday season for sure.
Dewey, I don't know what's scarier as I'm thinking about it. You dressed up as a hula dancer, or you talking about a graveyard market?
Well, yeah. So I'm going to give you a few others. So we're going to go fast, but I think we'll have a little bit of fun before we dive into options for sure. So another Wall Street term is tombstone, and I'm not talking pizza. Okay, are you familiar with tombstone in investing?
Tombstone and investing? No, I'm not.
Okay, well, a tombstone is actually something positive. A tombstone is what is a written advertisement about a public offering coming up by an investment bank, right? A tombstone offering is the document that they come up with. There's also something called a dead cat bounce. Have you heard of this thing called a dead cat bounce?
I've heard of a dead cat bounce, but please.
Yeah, no one at home, please try this with a living or dead cat, please. But a dead cat bounce is a Wall Street term to just show that a stock that has dropped precipitously might have a little bounce back up. Again, a dead cat bounce hits the bottom, bounces back up just a little, and then here we are just flat on the floor, right? So dead cat bounce, fantastic. One of my favorites are called zombie companies or zombie stocks. Have you heard of these?
Zombie meaning what? Risen from the dead, back to life, something like that.
I love it, but it's so the opposite, right? Zombie stocks or zombie companies are companies that are insolvent, yet continue to trade at a premium to whatever their value is. They're not worth anything, yet they trade and they continue on down the path. We actually had an increase in what are termed zombie companies this year because the Federal Reserve, by lowering interest rates and the liquidity out there, a lot of companies that may technically be insolvent were able to get lines of credit and loans, and so it's made an extra level of investigation, if you will, from our side of the table when we're looking at companies. But zombie companies certainly exist. A few others would be voodoo accounting. It's when a company uses some highly suspicious accounting methods to disguise what's really going on in the business.
Which never happens, I'm sure.
Right, never happens on Wall Street. Are you kidding me? For sure. Another one is called a death play, which is a strategy of buying or short selling a stock with the expectation that the move will prove lucrative should the company executive die. How crazy is that to trade a stock based upon what might happen to an executive of the company, right?
It is.
Wall Street. There you go. The last one, and this is going to be a great segue over to our special guest.
Great.
Okay, is called witching. Have you heard of witching before?
The witching hour.
The witching hour. Well, in Wall Street, we call it double witching, maybe triple witching, okay? And these are actually terms dealing with options, okay? So why don't we bring in our special guest, and he can start off by saying hello and a big scary booyah to ya. But with that, he'll talk about the triple witching and then go into everything else from there, okay?
Let's do that right now. And of course, you can see Dewey and his entire team and all the great work that you guys do. GreatLakesWealth.us. You can also see a profile of this man that's joining us on there right now. That would be Senior Wealth Advisor Bruce Palen.
Palen in the
Bruce,
house,
how are
everybody.
Hey,
blow
doing
the
great.
trumpets.
Yeah.
Bruce, great
This
to
is
see
going to
you.
be fun, I can tell.
Now, Bruce, we obviously we've talked in the hallways before, and we've done some stuff together. But great to see you, and thank you for coming on. Are you an avid listener of the What Do We Do podcast?
I have listened to all of them several times.
Good. And now you're a part of it. So please, I mean, Dewey, I know we're excited to have Bruce on here, and you know, one thing I guess Bruce would just be perfect to start with is to tell the people, you know, certainly your position here and what you do in regards to options before we dive into, I know, some of the stuff that you want to go over.
Well, I got to tell you about triple witching
Please.
first.
Go ahead.
Yeah. Okay. So 4 times a year, there's something called the triple witching hour. And that's when stock options, index options, and futures contracts all expire at the same time. And when it first came out, this triple witching hour, there was a lot of orders that would get poured into the system all at once, and the volatility was tremendous. And it would scare the heck out of everybody. So that's how the idea of, geez, the witching hour's coming up. This is scary. Well, over the years, with technology and some rule changes, it's not really as scary as it used to be. They kind of even it out. So you really don't hear that term as often. You still hear it, but it doesn't swing the markets like they used to in the past.
Is that something where, you know, I think a lot of people talk about, hey, the expiration at the end of the month or weekly or whatever it is. So that's basically just, what you're referring to with the witching is just extreme volatility with when those options are about to expire?
Absolutely, yes. That and because there's huge positions on these with mutual funds, with hedge funds, with a lot of different investors in many different ways. And when they're all trying to settle these contracts within a few minutes all at one time, it was chaos. Mm-hmm. And so they had to make the rules changes, and they had to make a few other changes also. But that happens 4 times a year.
4 times a year.
Yep, March, June, September, December, always on the 3rd Friday.
Now, Bruce, one thing that I was talking to Dewey about before too is on a big picture, on a general level, you know, if you could kind of fill our audience in and talk to the people about options on a large level. What I mean by that is I think a lot of people might not be familiar with a call, a put, the fact that there's 100 shares, you know, in terms of a contract. Could you just kind of 30,000 foot view tell someone what options trading is?
I'm going to even make it more simple than that, Sully. But first I want to let you know that I've been in the business for 30 years, and I've been doing options for over 30 years. And I'm really happy to be here at Great Lakes Wealth, where, of course, you know, we have Wall Street solutions with Main Street values. But before I get into the topic of the day, I need to emphasize that we all need a plan. And a sound financial plan begins with getting with a trained professional in financial planning. And they're going to create a plan for you that best addresses your unique circumstances. Now, the options portfolios that I use are, for the most part, used in varying degrees depending on a client's sophistication and their objectives. Realistically, an effective options portfolio, like the one I'm going to talk about today, is a complement to an already sound financial plan. To fully be able to properly diversify the type of account I'm going to discuss, minimum account size would really need to be about $250,000 and up. It's a pretty good size account.
Mm-hmm. Absolutely.
Some of these tactics can also be used in a limited way in some smaller accounts, like IRAs are a good example, but only in a limited way. Okay. Have you heard of a guy, Warren Buffett?
Yeah. We've talked about him a few times on this show.
Several.
Well, you know,
Sully's in the control room, but I know he's listening when Bogey and I talk about
Dewey
it.
has plenty. I think Dewey, you know, reads anything that Warren Buffett ever says and then finds a quote from it for every episode.
He's got a lot of good ones, too. Yeah. Well, you know, he uses these also, by the way. But I'll get into that a little bit more in a bit. Stock options, they really have many more uses than what most investors really realize. When the options market was created back in the 70s, that's 1970s, a majority of the participants back then were really seasoned market professionals, and they didn't really fully understand how best to use them at all. So consequently, a majority of these guys, they lost money in the options market, acquired a reputation as a risky casino-like marketplace. Well, I'm proud to say that my clients consistently make money in the options market by using them in a conservative tactical approach. Okay, so although options can be really great vehicles for significant short-term, fast money trading, that is not going to be the focus of this podcast today. So, Sully, what's Warren Buffett's number one rule?
Warren Buffett's number one rule. Should I know this, Dewey? Is
We
this
have
something
not said it on
Oh,
the
really?
podcast. Yeah,
Oh,
we
I
have
think,
not.
well, just from what I know about Warren Buffett, I think that his number one rule is only invest in companies that you believe in. I mean, he's always said that as a consumer,
okay.
he would should only put his money behind a company he knows and believes in.
Well, that's part of it. But his real number one rule is,
Don't lose money.
and rule number
Sure.
two is,
Kind of simple.
Rule number two.
Make money.
Rule number two. Can I answer that one? I love it.
Go
I
ahead.
haven't
Yeah,
had this.
go ahead. Yeah.
Rule number two. Don't forget rule number one.
Yeah.
Okay.
Makes
Is
a lot
that
of
right?
sense. Very simple.
correct.
That's
Yes,
it.
very good.
That's
Okay.
right.
So the objectives of the portfolio is that I use is high current income while building a quality portfolio with growth and a higher level of safety than just buying everything at the market. And what I really like about this, 100% liquidity. Okay. Now I actually I know you talked about the market in other segments, Dewey, but do you remember there was a time what was called the lost decade?
Heard about the lost.
The lost decade actually occurred from approximately the year 2000 to 2010, and that was like the only 10-year period in which the market had not actually gone up.
Because of 08, obviously.
Hey guys, it's Bogey. I want to take a second to talk to you about Dewey Steffen and his excellent team at Great Lakes Wealth. Look, do you feel overwhelmed with managing your assets in today's financial world? I mean, think about the times that we're in here in 2020. Do you want financial freedom? Great Lakes Wealth offers Wall Street solutions with Main Street values. They sit down with you to develop custom financial solutions utilizing all of your assets, even your 401k. We build the future you want based on your goals and your dreams. That is what Great Lakes Wealth is all about. Thinking about you, thinking about your family, and thinking about your future. Simply go to greatlakeswealth.us to schedule an appointment today. They offer better investments, better service, and a fee-back guarantee, okay? A fee-back guarantee. Your road to financial freedom starts at greatlakeswealth.us. Please visit greatlakeswealth.us or simply give Great Lakes Wealth a call today.
Well,
102.
there was a lot of reasons, but yes, that was right in the middle of it, yeah. And so now in today's market where we got this extremely low interest rates, so people are there going, oh my God, I want to buy bonds. I don't get any yield. And the earnings are good. So, geez, how can I make money here? I don't necessarily want to pay up for stocks right now. They're right near the highs. Okay, so again, the objective, high current income, growth, liquidity. And so what is an option? Well, the definition of an option, and I'm not going to go into the details of puts and calls, but an option is the right to either buy or sell 100 shares of an underlying stock. 100 shares of an underlying stock. And so just leave it at that, and we'll leave the other terms for maybe another day. But that's how we're going to start things right now with just that thought.
Great.
Okay, so the concept number one, and this isn't much really a concept. These are actual numbers that I took off of my screen right before the market closed, as a matter of fact. So we're going to use Apple as our feature stock today, and let's say we buy this quality blue chip stock, and we buy 100 shares, and at one point today was at 120. So if I buy 100 shares at 120, what do I need?
120 grand?
Just 100 shares.
12 grand.
12,000,
Yeah.
right. Okay, now let's just say we looked out 2 months from now, and we say, you know what? Remember, this is an option income portfolio. We're looking for income. Apple's yield with their dividend is less than 1%, kind of anemic. But anyway, so let's just look out 2 months to December, and we agree to sell our stock that we bought at 120 at, say, 135. Okay, that's just in 2 months. Okay, this is what's known as selling a covered call. And for that promise to sell our stock, someone's going to actually pay us $200. Okay, so if we make $200 and on our $12,000 for 2 months, good at math? Okay, let's just say the stock goes nowhere in 2 months. The stock is still at 120. It didn't go to 135. We made from the option 1.66%. All right. Now wait a minute. That's for a 2 month period. What if we go 6 months, or we have 6 2 month periods in a year? Okay. So we have to annualize that rate of return. So if we buy Apple at 120 and it just stays there, and every 2 months we sell these options, we're going to make 200 times 6 periods, $1,200. 1,200 on 12,000 is 10%.
10%.
And to be clear, you're talking about if it, like you said, if it doesn't go up at all.
If
right?
it doesn't go
so
up
you're saying
at all,
if it stays even, a tie is a win in sports. Certain sports terms.
we don't
right?
like ties.
It would.
Okay.
If it just stays flat, you really win, though.
Remember the lost decade here. Okay. What if things go into the lost decade?
Right.
What if Apple goes into a lost decade? We're still knocking down 10% a year on it.
Right.
Hey,
okay?
Bruce, I heard that in the lost decade, March of 2009, I heard the S&P went down to 666.
That's scary.
That's
Scary.
scary.
Yeah,
Am I right or am I wrong?
No, that is a fact, Dewey. Yep. Okay, so let's carry on with this example. Okay, so we just bought the stock at 120. We paid $12,000 for it. 100 shares, and let's say the stock did go to that 135 mark or higher. We promised to sell it at 135, and if that did in fact happen, our rate of return for just that 2 month period would be 14.6%. Not bad income. That's a net.
Sure.
That's not annualized. That's a net return if the stock did in fact go up. Now, if realistically you thought you're going to buy Apple and it's going to double, you don't sell these options. You just buy the stock and sit on it. Okay, so if I had to annualize that, that'd be a monster return. It'd be like 85% a year. Okay, just so you know. Now, if the stock goes down, well, wait a minute. Well, I just paid $120 a share, $12,000, and what if it goes down $10? Well, okay, you see, you're still going to lose some money here, but we hedged it. And instead of losing $1,000, we're only down $800. Okay, so it works as a hedge also. Okay, and let's see here.
Hey, Bruce, is there a name for the strategy that you're walking us through right now?
Yeah, I mentioned earlier it's selling a covered call.
Okay.
So that's hedging, a.k.a. Selling a covered call is a form of hedging.
Absolutely is, yes. Yeah. So in all of these strategies that I use for clients, we always sell options. We do not buy options. Buying options is kind of like walking into the front door of a casino.
Gambling.
And now who makes money at the casino every day?
The house.
The
The house, yes.
That right there, though, I think that what you're saying right there, the fact that you're hedging it and selling the covered calls is important to note, because a lot of people, I think, do have that mindset about options that they can be very risky, right? That they can be like gambling, like just sports betting, if you will. So what Bruce is talking about too is you're not just buying an option and hoping that it goes up, and if it doesn't, you're screwed. But you're also selling covered calls against it as well to make sure that you're not just betting.
We want income here, and so this gives us income on day one. Which is really important. We like income on day. We like income all the time, but getting it on day one up front, better yet.
Yep.
Okay, so buy the stock, promise to sell it if it goes up, take money in to promise if it goes up. Okay, now concept number 2. Again, real numbers from today. Many people have done this. We don't own Apple right now. We're really concerned that the market is kind of high. So we say, there's a lot of volatility here. Apple topped out at 137, 138 not too long ago. Now it's at around 120. Well, okay, I'll promise to buy it if it goes down to 100 again. So if I got to buy 100 shares at $100 a share, $100, $100 a share, we need how much?
10 grand.
10 grand. All right, good. Okay, so now we're going to agree to buy it. So I have to put 10 grand in my account.
Yep.
Now, if I promise to buy that stock, if it goes down in just 2 months, December again, someone is willing to pay me $200. Okay? Wow. They're going to pay us $200, and all we have to do is promise to buy the stock if it goes down to 100. Okay, well, let's carry this thing out. We got 10 grand in the account. We just did 200. And what's that rate of return for 2 months? 200 on 10. That's 2% for 2 months. I can do that 6 times a year. So if I never buy Apple at 100, and this goes on and on, in the course of a year, 2 times 6,
12.
12%,
Right. Yep.
12% rate of return. I never bought anything. One of my favorite stocks I'd love to buy. I never bought it, but I made 12% on it anyway.
From the option, right?
By selling, and now this is what we call selling or writing a put option. Okay, so wait a minute. Okay, let's go back here. First time we bought a stock and promised to sell if it goes up. Now we don't own a stock and we only promise to buy it if it goes down. And we get paid for both. Okay.
No, I think that's great too.
Yeah.
I mean, a lot of people don't realize how exactly that works with the premium and just with how the options contracts are. It is far more complex than just buying a stock, and that's why it's, as you said, important to build into a portfolio, because it's where your guys' expertise comes in, where a lot of people might not have a true grasp on how to do something like that.
Yeah, and they always say, well, when a stock drops 20% or more, it's in a bear market. Well, in the case of Apple, since it topped out at around 138, and if we promise to buy it at 100, that's a 20% decrease from its high. So we're buying it at buy low. Okay.
Is that the same thing? I think that the average term, and maybe you can explain this if it's totally different, but the average term that you hear, whether it's on TV or when people are talking, is when they say, hey, we're going to short the stock. We're going to expect it to go down. When someone says I'm shorting the stock, is that essentially a simple way of saying we're going to do put options on that?
Well, in that case, you'd actually buy put options. Okay, we don't buy any options in my strategy for clients. Okay, yes, it can be done, but no, I'm only promising that if you think Apple's going to go from 120 to 110, there are other ways to do that with options, or you can just short the stock. You sell it and you don't own it, and then you buy it back at a lower price and return it to the original owner.
So the simple answer,
a short.
the
selling
simple
puts
answer
versus buying puts, essentially.
Well, yes, but at the same
Somewhat.
time, if you wanted to short a stock, you could actually just sell the stock. You don't have to use options to do that. Again, the option market allows you to control 100 shares with one contract, right?
Sure.
So you can play the short side or the long side, but as Bruce has said so far, it's more of an income generating strategy with what he's laid out. Options, as well as the naked options, if you will, that Bruce, compared to walking in the front door of a casino, you also can use them the opposite as just a hedge, right? So he described income generating strategies, if you will, but you can also use options to hedge your position. And by, again, the leverage of the 100 shares, you can either insure or just insulate.
Now, I know everyone's different, obviously, but when do you on the What Do We Do podcast?
I was going to say, when do you do? That's a different podcast.
When do you generally recommend or advise someone to have some options within their portfolio? Because, again, I realize everyone's different, but is that considered just a a sliver of what most people should have, meaning should the average investor or certainly should your average client have some sort of options within their profile, or is that just really on a case-by-case, person-by-person type thing?
Bruce, I'll let you go ahead and answer that one.
Okay, yeah, as I mentioned earlier, it depends on someone's experience, sophistication, and what their objectives are. But for the most part, again, you start with a good financial plan. You start with good, solid stuff that you're not going to touch at all. You're just keeping it there for the long haul. But again, in today's market, I deal with a lot of people that are seniors. They're retired. They want income now. They don't have time for long-term stuff. They need the money right now. They want to golf today, not 10 years from now, okay?
Right.
So this is the whole idea behind. So all that stuff that you mentioned there, we kind of got away from what I was focusing on because it's an option income portfolio. I'm looking for current income now. Remember, we bought Apple. We agreed to sell it if it went up, and if it didn't go up, we were going to make a great return.
Right.
10%. Oh, we didn't even own it, but if it went down, we agreed to buy it if it go down.
Right.
Okay, but what if it doesn't go down? We still make 12% on it.
Yeah.
Wow, not bad. Okay.
Win-win.
So, okay, that was concept 1 and 2. Concept number 3, we combine concept 1 and 2. What do you think that's called? A combination.
All right.
Yeah.
I like it.
Yeah, all right. Okay, so we do these combinations, and in a portfolio, we like to use anywhere realistically 15 to maybe 35 stocks on the high end.
Okay.
So we're doing the same thing we did with Apple, except we're doing it with a lot of different stocks. Okay, so when you do that, now you've got a really good portfolio. We're using all pretty much S&P 500 stocks, a lot of Dow stocks.
Yep.
Okay, so let me summarize what we've talked about here. We've agreed to buy stocks low. We've agreed to sell stocks high. What a concept. If we do neither of those, we make a great rate of return. Okay, now back to our objectives. Do you recall what the objectives were?
Warren Buffett said it best, right? Those are the objectives, to never lose money and to never forget Rule 1.
You got it.
Well, yep. Well,
And a simple way to put it.
And let me also mention that prior to economies of scale, and meaning trading for free or for trading, close to nothing, you couldn't really involve yourself in Bruce's third strategy anyway. When you're buying option contracts in 30 to 35 names, right, there's a transaction cost, right? So whether it was in prior years just paying commissions for stocks, there were certainly commissions for options trades per contract, et cetera. So with what's happened in the last 12 to 24 months, it's actually made it way more efficient to transact in multiple options strategies. If you're following along, the cost was somewhat prohibitive before. You'd have to be using enough dollars to justify what you were paying in the commissions to the brokers. But this day and age, again, it's especially here at Great Lakes Wealth, through who we use as our custodian, it's very close to a zero cost transaction.
And I think even with options and the fact that it is 100 shares and within these contracts, it does provide a high ceiling. You know what I mean? It does provide a very high ceiling as opposed to just trading a stock traditionally like people do. And I think that, Dewey, we've talked about this before too, with the Robinhood type investor nowadays, with how many people are now on their smartphones trading options every single day, day trading options every single day, which can be more betting at times. Certainly what Bruce is doing is a hell of a lot more complex than that. But Dewey, I think you'd agree that we see a lot of the Robinhood type investor that is trading options, perhaps more than they've ever been traded.
Well, this year 2020 has been the most volume in options in the options markets, right? Bruce and I have talked about
Which is
this.
very believable,
Right.
with everything with Robinhood and those smartphone type traders.
It'll be bigger next year too. Yeah.
Right. And so again, with Bruce or someone who's, really paying attention to those markets and those levels on a daily basis, you can understand if there's a lot of contracts being transacted at a certain strike, which is, again, a different terminology. But there are novice investors that, again, just wanted to find an outlet for their gambling. And again, it is.
Right,
They're
especially when sports went away. I mean, that was
again, Bogey has mentioned this, that he knows several people that, again, they've just
well. Look
wanted.
at even when when COVID happened and sports got canceled. One of the biggest stories was at Barstool Sports, which you guys are familiar with. It's a huge sports media new age type company, and Dave Portnoy, their CEO and president, literally instead of betting on sports every single day, started trading options every single day and just playing the stock market every day. And it was totally gambling and betting, totally different than what the advanced strategy that Bruce is obviously talking about and going to wrap up with here as well.
That's right. So he was walking into the front door of the casino,
Right.
and we were very glad to watch him pull the lever on all those machines. So our objectives, just to remind you, were high current income, good, and to build a portfolio, a quality portfolio. So there's some growth there, high level of safety, than just buying at the market. And again, 100% liquidity. You can get out at any time. You're not stuck. And so we met all those objectives with what we talked about in buying low, selling high. And it does accomplish our objectives. So realistically, it is not really a get-rich-quick scheme.
Sure.
By any means. We're not going to double our money in 2 months. That's going to the casino.
Mm-hmm.
Okay. Now something you got to watch out for. It can limit your upside, but it can also very much limit your downside.
Right.
So I could go on, and there is so much more to the strategy that involves when I manage portfolios, using stop losses on the stocks that I own, techniques called rolling up and down positions, and then some tactical buys and sells, because this is an option income portfolio, that are based on the ex-dividend dates of when the stocks are actually paying their dividends. So all of these are important in maximizing the returns. Again, staying 100% liquid. And there is more than just what I mentioned here. And for the sophisticated investor, it actually keeps getting better. Remember, hope is not a strategy. Just show me the money.
Excellent.
Don't forget rule number 1, right?
Yeah.
Love that. And Bruce, obviously, well, we certainly appreciate you coming on. And I want to just mention again, GreatLakesWealth.us. They can find all the information on you guys have so many calculators on there. You have so many information about your portfolios, and certainly a way to get in touch with Dewey, with Bruce, and the entire team at Great Lakes Wealth. I think something like this, just having a conversation about options, I love, and I think that, I'll say this again, I think that it's very informative and educational, because a lot of people don't know the complexities of it, like what Bruce laid out.
We just wanted to get an introduction to options today. So Bruce, we really appreciate you coming in today. It was fantastic.
Great fun.
This is, again, just the beginning of what is a much more detailed subject for sure. But
we could do a whole nother episode on this sometime.
Well, absolutely. Again, as we always say, we're just getting started, okay? But along those lines, today's October 27th, so we do want to wish everyone a wonderful Halloween week as we get into Halloween this coming weekend.
Yep.
But the scariest day of all, maybe next Tuesday, 1 week from today. It is the U.S. national elections.
That's right.
Right, November 3rd. We're going to have another special podcast that day. We're going to just be talking about different Wall Street terms. We're going to be talking, again, in detail about things like don't catch a falling knife. Have you heard of this? Mm-hmm. Right, so we're really going to kind of get into some more, again, terms of the market. And then from there, we're going to get cooking into post-election, the run for the end of the year.
And also, Dewey, I know you're a humble guy. I'm not letting you off the hook here, right? Because seems like every single time I've flipped on the TV lately or gone on social media, I've seen your face. You've been all over the news. You've been, and it's warranted, because you've been doing something really, really cool here at Great Lakes Wealth. So I want you to just explain what you guys are doing in terms of your fee structure and the big announcement that you guys made recently. And I commend you for what you're doing in terms of charity. If you could please just fill the people in here as we're wrapping up.
Well, sure. Well, at Great Lakes Wealth, we believe in community, absolutely, right? And so we announced back on October 15th that for any current clients that deposited money into their accounts from October 15th through the end of the year, as well as any new clients that come on board between October 15th and the end of the year, all of those dollars that we would charge a fee on, we're going to take half of our fee for the entire year of 2021 and donate it to charity, right? We call it our fee, your charity, helping the entire community.
So the person gets to pick the charity where it goes to?
Great question. Thank you for asking. We've listed 4 charities.
Excellent.
If they don't want to pick their own,
they can pick one of the 4. Okay.
Pick one of the 4, or they can pick their own, right? But we've aligned ourselves with American House Foundation, Forgotten Harvest, Defender Mobility, and Beaumont Children's Hospital, the Children's Miracle Network.
Great.
And if any of those 4 are not really what you would want to have as your charity, then we absolutely have an option where you pick your own. And we are really excited in this day and age, in this year of 2020 with COVID, there are absolutely the haves and the have-nots. Those that can invest and take advantage of whether it's option strategies like Bruce has mentioned, but there are so many people in our community that are having a tough time putting food on the table.
No doubt about it. Well, Dewey, we certainly thank Bruce for coming on today, and we thank you, Dewey, for what you're doing here at Great Lakes Wealth and helping out the community. I think that's awesome. I'm going to certainly let you give your famous out cue here in a minute. But, of course, everyone, make sure you visit greatlakeswealth.us and make sure that, I know it sounds cliche, but make sure that when you check out the What Dewey Do podcast, that you do hit subscribe, that you do leave a quick review, and that you do text a few of your friends and share the episode as well. It really does go a long way. So another great episode here, episode 22 now of the What Dewey Do podcast. And Dewey, I'll let you finish it off.
And I'm going to ask Bruce to join us with We're Just Getting Started. And a great big Halloween booyah to ya.
The opinions expressed in this program are for general information purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It's only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risks and possible loss of principal capital. Please seek advice from a licensed professional.